Waverly on the Lake. This is our third project. So this is about 1,000-unit multifamily on a lake in Michigan, just outside of Ann Arbor, which is where the University of Michigan is at. You can see from the overhead photos, it's a beautiful project. The prior owners didn't take very good care of it. So if you look in the upper left, you can see we've got these cabinets that are old looking with old appliances. So our goal is to renovate a lot of the units and do a large increase in the rents. We've also got a grant from the utility company locally to replace the inefficient heating and air conditioning systems with high efficiency systems that will greatly reduce the electric bills. So over a 4 to 6 year period, we anticipate this is going to generate about a 16% annualized return. Thanks to the new tax bill that passed in July, bonus accelerated depreciation is now back. We anticipate this particular project is going to generate a lot of depreciation. So for those of you who are selling an investment property and you've got a capital gain, we'll be able to offer depreciation to you to offset your gain, and this is one of the main projects that's going to deliver that to us. What's exciting is we're a little bit ahead of schedule. The first 10 renovations have already been completed. 3 of them have been leased at or above the pro forma rents. So we've gone from about $1,025 in rent to just under $1,400 in rent, so about a $375 rent increase after the renovation. So pretty great project. We bought this as is with the rents in place on an 8.7% cap rate, about $80,000 a door, and we think we're going to sell it for about double that. So very exciting project. So let's recap. Our target net return at the moment is 18%. We'll probably add a couple more investments to this, so it might go up or down a little bit. Anticipating a 4 to 6 year life. The RPM projects in particular are the ones I think that might take an extra year or two, but most of these will liquidate before that. The preferred return paid to you as a limited partner. So if you're in the A class, you get a slightly higher preferred return of 8% and you get none of the depreciation loss. The B class gets a slightly lower preferred return of 5%, but it takes all of the depreciation write-offs. So if you're currently an active investor selling a rental property and you don't want to do a 1031, the B class shares will be able to allocate a lot of depreciation to you to offset your capital gains. But if you're investing in an IRA, for example, the A class with the higher preferred return is definitely the way to go for you. How does carried interest work? Well, the first thing that happens is all the preferred is paid up. So in the first 2 or 3 years, there probably won't be any cash flow. So we will stack that up for you. And all of the backlog of preferred has to be paid before we start getting any bonuses from a carried interest standpoint. It's a 28% to the general partner, 72% to the limited partner, up until we've got a cumulative annual return of 20%, and that's calculated on each project. For the good projects that we have that go over a 20% return, it's a 70-30 split. And if we get one that goes over 30% IRR, it's a 60-40, 60 to the LP, 40 to the general partner, and we'll probably have one of them that'll be that good. We do invest along with you. The one-time acquisition fee is $33,000. That's divided pro rata among everybody who provides capital. So myself as a general partner, I'll be putting money in. I'll be paying a pro rata share of that flat fee. The annual management fee is $66,000, and that too will be divided pro rata among everybody. And I don't anticipate that we'll have these other expenses because we probably won't get an external audit for this. It won't be required. So a couple of testimonials. Jay said that Ironton Capital helped me reduce the time and headaches I had when I managed my rentals, and we're on track to beat my old returns as well. Jared, 15 months struggling almost nonstop with his rentals, sold several of them so he can invest passively with us, and he said, it feels good to have the time back with these passive investments. Ironton made it really easy. And Justin was able to transition from working as a small business owner and a landlord to selling most of his assets, and he's moved to Portugal. His new passive income from us enabled him to be able to do what he's always dreamed of doing with his family. So I'm very proud to be part of enabling a great lifestyle for him and our other investors. So imagine and picture this. You finally get your time back, time to relax and enjoy the quality time with the people who matter the most while your portfolio continues to grow. I want this for you. So let me ask you, did we provide value for you today? Did you get some insight into what you might have been missing when you thought passive real estate investing was out of your reach? Would you like more? So here's the funds that we talked about earlier today, and this will be for Fund 11 that we discussed. So what are the things that we bring to you? rapid results because we do all the locating, touring, and due diligence for you. And you'll have more time to do what you want, when you want, with the people who matter. You'll be enjoying greater diversification across geography, asset class, strategy. And this investment is entirely and truly passive. We do all the heavy lifting. We provide quarterly updates and you deposit the gains. Does that make sense? Well, if I did a good job, would it be okay if I share with you how you can go deeper into exploring this investment? Who is it not for? It's not for the people who want to do it the long, hard way, for the people who want to jump in with their eyes closed. I want you to know exactly what's included, and you want to check with your financial advisor to make sure that we're a good fit for your overall portfolio planning. Who is it for? Accredited investors who are done dealing with renters, or professionals who are tired of looking at endless deals after work, or retirees who are done managing and they just want to leave the heavy lifting to the experts. Sound great? So we have a satisfaction guarantee. Like I mentioned, when we get done picking all the investments, you'll have 10 days to decide if it's for you or not. If not, we'll give you your money back. I want you to be as excited as I am about the investment. Also, we have an early bird 10% return. So if you are in the first 45 days, that is by Friday, September 5th, and you make your deposit, you'll get a 10% return calculated from the date of your deposit until when we close the fund, which will probably be in early December of this year. And whatever that amount is, that's going to get added onto your balance. So instead of you sending in $100,000, it's going to be $103,800 or whatever the math ends up working out to be. So it'll help to amplify your returns a little further. What is an accredited investor? Well, you have to meet one of these criteria. If you're single and have a household income over $200,000, if you're a dual household income over $300,000, or if your investable assets are over $1 million, not counting your primary. If you meet any of those criteria, we are allowed to work with you. We've got just a simple one-page form for your CPA attorney to fill out to show that you're accredited. If you don't have a CPA, just do your taxes yourself. We have an alternative method for you to easily do this. How do you fund it? You can use cash. You can use your self-directed IRA. If you have questions about that, we've got specialist Stephanie that will walk you through all the steps. You might take cash out with a line of credit from one of your properties. So if you've got a rental property with a lot of equity, I can introduce you to banks that will do a second mortgage, even on an investment property, to free up capital. You do a home equity line of credit on your primary. Lots of different ways you can do it. So if you're curious if this is right for you, you might be an active investor now with a rental that's cash flowing, and you're curious, how would Ironton's investment compare to what I have currently? Well, just go to irontoncapital.com/review, set up a time, and we'll do all that math for you. We'll show you the wealth accumulation for your family over the next decade if you just hold on to that rental, and then show you the alternatives if you were to sell it and put it in the stock market, our medium-term fund, our long-term fund. What would the advantages and disadvantages be financially of those different choices? And then you and your family have all the facts you need to make a really well-rounded financial decision. So please take advantage of that. Thank you for making the time to listen to me today, and I hope to talk to you soon.